From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, this is the COB, all the stuff you need to know about the day in business and markets. I'm Juliette Sali.
Yeah, and I'm Daniela Couillet.
So what have we seen on the markets? It's really these geopolitical tensions once again, Danny, seeing the markets a little lower. So let's have a look at how we're finishing out the day on the CIBO 200 index, off by 5 points or about 0.4%, and near the lows of the day there.
Absolutely, pretty lackluster to say the least, but we didn't have a strong lead from Wall Street, so hardly surprising, was it, Jules?
No, indeed.
And Asian markets, they're always, I think, a sea of red today. Japan's off 2%, so really, Australia not doing too badly.
No, indeed. And China, worth noting as well, keeping its MLF unchanged. Let's talk about some of the key moves. I mean, we talked about risk off there, but Albermarle, this was maybe fascinating, maybe kind of almost, were we waiting for this? Because we kept seeing Hancock Prospecting increase at stake. And then Gina Rinehart's company got to that 19.9% where it would have to
trigger a full
launch
takeover.
a full takeover.
Yeah, I mean, I'm sure Albermarle is feeling like, you know, its fingers just got chopped off, and they're probably just a little bit frustrated, as are a few, you know, corporate bankers over this. But we're going to have to wait and see how this plays out, because it's one thing to be antagonistic, chatting to Adam Dawes today, saying that, you know, she was being antagonistic, but is there more to come from her? Or
did she just really want to stop Albermarle? But you've got to think as well about Liontown now that thought it was going to get $6.6 billion.
I know, and it's got to raise all this money for its Kathleen project. So it is, you know, whether it's a good look for Australia, I'm not too sure. But, you know, there is potential for maybe more consolidation in the lithium space, particularly if we do see more share price weakness off the back of lower lithium prices. Yeah,
so worth noting Liontown, of course, in a trading halt on the back of that. We mentioned the risk off. I mean, it's really, really difficult when you wake up again to see these horrifying pictures coming out of the... I'm talking about what we're seeing in the Middle East. And then you've got that continuing movement in terms of the gold price, the dollar, all those moves we see when you've got a war at play. US earnings, though, in focus too.
Yeah, this will be really interesting. I was telling you I was listening to a podcast over the weekend. A lot of the earnings have been downgraded in the run-up to the earnings season. So really the companies that we're going to miss have probably already flagged it. So you know, it mightn't be too bad, but it could be a case of the macro overriding the actual numbers. Do you know what I mean? Because we've had some good numbers. Pepsi had good numbers, JP Morgan had good numbers, but you're not seeing the corresponding reaction in the share price.
I read a really interesting piece too about the fact that consumer discretionary stocks are meant to be the best performing for the quarter. So if that's telling you anything
Consumer
about I mean, it's coming off a very low base, but if that's telling you that if people really did think a recession was coming, they wouldn't be spending.
Correct.
So I thought that was a really interesting take on it all. Okay, let's have a look at some of the sectors in the space. Energy was a standout today, as you would expect, with that big jump coming through in crude. So we've got Woodside finishing higher by more than 1%. Beach Energy there up by about 2%. Healthcare, an interesting one again today. So CSL off.
Yeah, CSL. Well,
they had that shareholder or what was it, Investor Day or something?
Yes, it's an Investor Day. They do have a specific title, Capital Day or something. But I think we can take some good news away from the fact that you did see some buying in ResMed. I think that came in from overseas, also in Fisher and Paykel. But otherwise, Telix Pharmaceuticals looked like it took the full brunt of the selling in healthcare stocks down of 4.3%.
Yeah, let's have a look at travel as well, because Qantas, which is actually not making it onto our travel page, but it's of course had some more changes. Olivia Wirth, the head of the loyalty program, leaving. And we also had overseas arrival and departure figures today from the ABS. I was talking earlier to one guest who really likes, from Shaw and Partners, Philip Pepe, really likes Hello World in the travel space. And he was saying, you know, like we're well off getting back to those 2019 travel levels, but everybody, and I can attest to this, you know, I took an 8-month sabbatical before moving back. What he was saying was that people are going to continue to travel after the pandemic, because
Right.
even if you think, oh gosh, you know, my mortgage rate is increasing or whatever, you're going to put away that money. You may not buy that new dress that you want, but you will try and put away that money to travel, because we feel hard done by after those last couple of years.
Oh, that's interesting. So the travel mania will continue.
All right.
Now, interesting to see Australia's E-Safety Commission has fined Elon Musk's social media platform X $610,500 for not cooperating with an inquiry into anti-child abuse practices. The Commission said X failed to respond to questions including how long it took to respond to reports of child abuse material on the platform and the methods it used to detect it.
And most recently, the EU said it was investigating X for potential violation of its new tech rules after the platform was accused of failing to rein in disinformation in relation to Hamas's attack on Israel. X told the regulator available anti-grooming technology was not sufficient capability or accuracy to be deployed on Twitter. Meanwhile, Alphabet's Google also received a warning for its generic response regarding child abuse content handling.
I find that all incredibly sad when I heard the news today, but anyway, that's just me going over the top with my opinion, which I'm not meant to do. So let's move ahead. Lithium producer Liontown Resources, we were chatting about this before, they're now in a trading halt because a US Albermarle has pulled the pin on its $6.6 billion buyout, citing concerns around the complexities of the transaction. Liontown last week granted the world's biggest lithium chemical maker an extension to examine its books and enable Albermarle to put forward a binding offer.
Yes, and the deal was dropped, as we mentioned, after Hancock Prospecting, which is that firm controlled by Australia's richest person, Gina Rinehart, bought 19.9% of Liontown over the past few weeks, and that stake would likely have been enough to block the Albermarle bid. Liontown went into a trading halt just before making the announcement to the market, pending a finalisation of funding around the Kathleen Valley lithium project.
And the stock of the day was a Liontown Resources. So let's check in and see what our two guests had to say on the call today.
So I would say that I am a little bit surprised.
Yeah.
But if it gets sold off aggressively, it's probably good value from a risk-reward perspective. But the whole lithium space has been struggling to get the traction that everyone was expecting. It's been very, very volatile.
Yeah.
It's a chemical process. You're not digging, I think I said this to you last time I was on the show, you're not digging iron ore out the ground in a very predictable fashion.
You move out of some of the stock once they reopen, but depending upon what that share price does. But if you're at long term, it's still a very good asset, and obviously both Hancock Prospecting and Albermarle have been interested in the long-term viability of the project, so could well continue to do well.
Okay, and let's move on to our guest for the COB, and Fraser McLeod from Assurance Partners is joining us now. Fraser, thank you so much for joining us this afternoon.
Good afternoon, thank you.
Okay, retail sector, really interesting in the US that a lot of quote unquote sort of stocks that weren't meant to be impacted, they're meant to be defensives, have been impacted by GLP-1s. Even Walmart made mention of it. But let's focus in on our retail sector. Woolies and Coles haven't necessarily been the defensive picks that, we all learnt as our playbook for investors.
Sure.
How are you seeing it at the moment?
I think that's a good roundup. We can take a lead from overseas, and a lot of what's been happening in the US or perhaps the UK market or in Europe that has this translation effect into the mainstay of the retail environment here. It's very much of a mixed bag for the consumer, and you're right in terms of stocks like Hello World. It's the reason the consumer who chases Hello World's products is doing really well is because that's the older generation, baby boomers. They see increased income coming through bank balances. They've got great equity portfolios. Many of our clients, they are of course that age. whereas those who are in their 20s and 30s and perhaps into their 40s as well, who are straddled with a lot of debt, those are the households that are really having to start to make some tough choices, especially around the more discretionary retail spend, and even within the non-discretionary, where they're going to spend that money. What we are seeing is a lot of people are moving to lower quality products. So yeah, it's very much of a mixed bag within retail. For Woolworths and Coles, we would certainly be much more favourable on Woolworths and paying that extra PE premium, and that's just simply from the fact that the Woolworths do everything better than Coles. So you're better off in more uncertain times for the consumer to be paying for the quality, and I suppose look, it's a bit of an underhand a slap towards Coles, but there's a reason why the thieves are queuing up outside Coles and not going to Woolies, and that's because it's easier to steal from Coles. It's actually easier to take their money.
Yeah.
Whereas Woolworths have invested for many years, much better tech, and now that unfortunately that's coming home to roost for Coles. So Coles probably structurally in a bit more trouble. Need to spend an awful lot of money at a time when costs are still high. And the good news for the consumer and ultimately for many of these mainstay retailers, especially supermarkets, is that finally we're starting to see the inflation figures around food especially start to come down a bit. So the household bills on terms of food are not going to be skyrocketing again over the next 12 months as they had over the last.
Yeah, Fraser, when you talk about the theft piece, I'm not going to name names, but somebody I was overhearing, it's definitely not Danny, no one of course that we know from ausbiz, but someone was telling me that they got a really nice steak by putting through a brown onion.
Oh yeah, it's the brown onion trick.
Yeah, it's like pushing up the brown onion on the thing.
This is true. The true answer here is it's not people stealing brown onions for steak. It's more to do with organized crime. So they just simply overwhelm the local security. Whole teams of pretty savvy criminals effectively do raids on supermarkets, and then there is this black market nowadays of onions and steaks, I believe, I suppose. But the point is, look, the thieves go where they can steal, and that's just indicative of the business and how well management has protected the business from the decisions that they made many years ago.
Yeah.
So if your choice is between buying Woolworths on 24 times or Coles on 19 times, go where the thieves do not.
All right, let's talk about Treasury Wine Estates. In my previous life, I had the terrible job of going to Shanghai for the launch of Penfolds Grange for TWE.
Horrible.
It was terrible drinking Penfolds with all the movers and shakers of Shanghai. But this is really interesting in terms of the momentum in what we're seeing with the trade relationship here too. So tell us your take, Fraser.
Well, first of all, none of us have the clear picture in terms of what's going to happen here. Ultimately, this is a closed off, high stakes politics that is playing out. From the feedback that we're getting over the past few months or so, you would think that Australia is warming and the Chinese are warming to a bit more harmonious relationship in the future, where there's not just simply Australian products are not just taxed beyond belief and effectively closed out of Australia. That would be good news for Treasury Wine Estates, but I think it's easy to fall into the trap of saying, well, China is almost this derivative trade on Chinese Australian politics resuming a more normalized path, because that won't necessarily change into immediate earnings benefit. You can't just suddenly turn on the production line and produce more Penfolds Grange. It simply doesn't work that way. Penfolds will be very careful not to make sure, even if they were to be suddenly opened up to China, Penfolds will be very careful not to make sure that there's not a sudden price spike. That would be bad for business as well. And almost in a way, they also need to make sure that whilst their customers in the US and in Europe, that they have been fed adequate volume. What they're not wishing to see happen is that a lot of volume had been going maybe over the past few months or past year towards customers in Europe or in North America, and then there would be a secondary market would start up of once the Chinese are bidding again for Penfolds Grange or a lot of Penfolds products or Treasury Wine Estate sweet products that then effectively Treasury Wine starts to lose control of how their products are priced. So it's even if it's good news, it'll probably be an ease in, and there will not be an immediate benefit. So we might get a kick out of the share price, but it's just I think it's just too hard to call. To be honest, it's too hard to be able to put a very binary bet outcome on that stock event. So not a big fan of these event trades if we don't have much of an edge to be able to call it.
Okay, and just really briefly circle back to some of these retailers. Is Wessy's in a better position over Harvey Norman and Super Retail due to that conglomerate style of earnings that they have?
Yes. Yes, I mean, Wesfarmers as a conglomerate, they're no longer the sort of old retailer that many of us would have bought the stock for a few years ago. So you would say that Bunnings, which is much more diversified business, not just selling hammers and nails anymore. They do have it's a safer business and a more diverse business because of it. So that is more resilient. You would also say that that the likes of Kmart is going to be a beneficiary with the large, maybe not majority, but a large proportion of the population of households in Australia that are having forced to trade down. So they should be the beneficiary of that. What we are seeing as well is businesses like Aldi have been eating into market share, and they have a level of growth overseas, which is probably happening here as well, that has been significantly stronger than maybe some of the slightly higher quality retailers that consumers are trading down into. So because Wesfarmers would be the trading down beneficiary, and because they're better protected from having Bunnings, you would prefer those as an investment play over the course of the next year and a half than some of the more just simply exposed discretionary retailers. The likes of say Harvey Norman is maybe worst there because Harvey Norman just has that rising costs and shocking situation in that they're at a discount to the rest of the market from a valuation point of view, but it's probably a bit of a valuation trap.
All right, Fraser, thanks so much. Fraser McLeod there from Shaw and Partners.
Okay, let's check in with the leaders and the laggards of today's trade. Oh, there we go. Regis Resources, West African Resources, Perseus Mining, Silver Lake Resources and Ramelius. Did somebody say gold? Somebody
did say gold on that safe haven buying. All right, let's have a look at the laggards. We saw Fletcher Building off 8.
That's what coming out of a trading halt I just saw.
Fletcher Building?
Yes,
okay.
So I'll have a quick check.
All right, you check that while I run through the others. Reliance Worldwide finished down almost 5%. Megaport was down 4.6%. Telix Pharmaceuticals was off by 4.3%. And Block, of course, the Australian listed shares, they were down 4.1%. Did we find out about Fletcher?
No, I'm still faffing around here.
All right, well, let's quickly look about the small cap leaders and laggards. Stacey and Gold, speaking of gold, Spartan Resources, Helios Energy, Catalyst Metals and 88 Energy, so all gold and energy stocks as you would expect. They were the only two sectors, energy and materials, that finished higher today. And when it comes to the laggards in the small cap space, we saw Bowen Coal down 13%, Playside Studios was down 9.5%, Fluence off 9%, and 40S Memory was down by 8.9%.
And it looks as though Fletcher Building has dismissed BGC claims and provides detailed updates on basically they had plumbing failures confined to Perth. So I think that is the only thing that I can find at this point in time.
From the West Australian, the headline writers have been having fun. Fletcher Building shares down the tube amid flood of BGC plumbing issues. So
there you go.
A burst pipe blow up, they say, with the big builder BGC. All right, let's have a look at what's happening overnight, and not much. Apurva and I, the producer, had to scratch around for this. There wasn't really anything at all. The US Empire State Manufacturing Index. So a bit of a quiet start to the trading week. But when it comes to what we're looking out for tomorrow, there's quite a bit, Danny.
Wow, RBA meeting minutes, and we also have the New Zealand third quarter CPI, and ours will be coming up on October the 25th, I believe. And then looking to tomorrow, afternoon, early evening, Eurozone ZEW business confidence for October, UK unemployment for August, and UK housing market sentiment, industrial production and retail sales. And they are having a tough time over there.
All right, so let's have a quick look as we've rounded out the day's trade as to where we have finished up, and it was a negative day, down 0.4%. On the CBO 200 index, we now have the close as well in terms of what we saw on the S&P ASX 200, which was down 25 points or 0.4% at 6,972. Oh, that's the ASX 300, excuse me.
No, it's actually,
7,026, down
exactly.
24 points or 0.4%. Excuse me, I need to get reading glasses. At that age, Danny, where you can't see things without glasses now. Have fun.
Well, I just cheat. I wear contact lenses. Anyway, well, that is it for us today. But check out all the great interviews that we have up on the website. And we will be with you bright and early tomorrow morning with everything that's going on in markets and lots of great guests lined up.
Indeed. We'll see you then.